Natural gas prices have gained some 30% since mid-June as excessive hot weather has swept across the U.S., causing higher demand for natural gas to run air conditioners. The big move comes after excess production and weak demand pushed natural gas prices to a 10.5-year low of $1.90 per BTU in April. So where do prices go from here, and what does it mean for investing in natural gas stocks? Here to weigh in is Sandy Villere, co-manager of the Villere Balanced Fund, a 5-star rated fund by Morningstar. Sandy, welcome to the program.
Thanks for having me, Jennifer. I appreciate it.
What's your outlook for natural gas prices? Does the rally continue?
Yeah, I think ultimately you're going to see it. They're still going to continue to lift a little bit. You could see, your $3 today. You could see $3.60 by 2013, and we're at $4.50 for 2014. So I think things continue to firm up, and it's pretty historically interesting times with the divergence between oil right now.
What do you think is going to drive that move higher?
I think just continued demand. Also, I think you're seeing more rigs come off of these. As the drilling gets less economical in some of these gas shale plays, you're going to see more rigs come off, and you're going to see prices firm up a little bit more.
What about the outlook for exports of natural gas? Do you expect that will pick up, or so long as the global economy remains depressed, will we see exports for natural gas actually suppressed as we go forth?
Yeah, I think they'll probably firm up as well. I think there will be a little bit of pressure on the world economies, but I think there's going to be limited pressure on the domestic economy. So I feel like prices are going to get a little bit better. And the only thing is, when they do get a little bit higher, when you do get, let's call it $4.50 prices like that, I think that is going to ultimately create more supply is going to come on the market as these rigs turn back on, and it's going to kind of keep a ceiling for a long time on natural gas prices. So I'm pretty bearish on natural gas prices as we look further out.
You're bearish over the long term, so given that, what are the investing implications? Would you be avoiding the group, or are there certain names you would own here?
Yeah, honestly, I like to have my cake and eat it too. So there's a name that we own called Sandridge Energy, which is started by a guy named Tom Ward, who co-founded Chesapeake with Aubrey McClendon. This was one of the Wall Street darlings when it came public, as they were mostly natural gas. Tom has been so bearish on natural gas that he made, in 08 and 09, he made some nice acquisitions in Forest Oil and Arena Resources, and now it's about 60% of his production is oil and about 40% natural gas. So I think you can get a company like that you can enjoy the high oil prices, but then, and frankly, I should say that 90% of their revenue is coming from oil and only 10% natural gas prices. So if you do get a lift in natural gas prices, it can help Sandridge, but the oil is going to carry the day for them right now.
So really, you're looking at players that are more highly leveraged to oil than to natural gas, where their main business is oil. Is that correct? Is that a right read?
Yeah, that's exactly right. I just think I think gas is going to be a long, tough journey, and I think I'd rather be much heavier into oil than natural gas at this point.
So then I would be remiss if we didn't bring up the high-profile company Chesapeake Energy right now. Is it safe to say that you, since that is highly actually leveraged to natural gas as opposed to oil, would you recommend that investors stay away from that, not only because of the fundamentals of natural gas, but because of the missteps that the company has had recently and a lot of uncertainty surrounding that name?
Yeah, I think this really would be, I almost call it a special situation, because, yeah, very highly levered to natural gas prices, so it should do well fundamentally. And frankly, if gas prices come up, that's going to cure a lot of evils and a lot of things that have gone on with the company. But it's one that I would say is a true special situation, and you might want to stick with something else that's going to give you exposure to natural gas without the other issues going on with that company.
All right, any other names before I let you go that you'd like to venture?
We own some NOG, which is a non-operator in the Bakken. I think that's going to work pretty well. But frankly, no. I would just tell people kind of be careful with your gas names. I think if you stick with oil, it's going to do well over the short and long term. And so Sandridge is my favorite name right now. They're going to double production in 3 years, and they're going to triple their EBITDA in 3 years. And I've got a lot of faith in Tom Ward. Everything the guy has told me is going to happen has basically happened. So I like that name a lot, and we're a big holder in our mutual mutual fund, the Villere Balanced Fund.
Sandy Villere of the Villere Balanced Fund, thank you so much for coming on and sharing your insights.